Public opinion can be fickle. Earlier this year, people were angry with oil companies for making excessive profits, and now it's the turn of the banks. Once again, the government is taking action, asking executives to explain why savings rates aren't higher and what banks are doing to ease the mortgage and inflation crunch. The row over Nigel Farage's Coutts account has not helped the public perception of UK banks either. As with BP and Shell profits, windfall taxes are being discussed as a way of reining the banks in. That brings us on to our stock of the week, HSBC, which is larger than NatWest, Lloyds, and Barclays combined. The company has had a great year so far, doubling profits in the last 6 months and seeing a 20% gain in the share price so far this year. There's always been a feeling that HSBC is different to other UK high street banks, its size, its presence in Asia, etc. And that's been the case with results this year, which have been better than NatWest and Lloyds. The company has also announced further buybacks. And while the most recent dividend is the same as in the first quarter, HSBC is yielding more than 5%. After the results, Morningstar analysts raised their fair value estimate for the bank's Hong Kong shares, and they say there's still a 20% upside for both UK and Asia listed stocks. Of course, there are risks to this scenario. The bank's chief executive said that tougher times are still ahead, especially for UK mortgage customers. HSBC has fought off an attempt to break itself up, but the idea that it is too big will not go away. Beijing remains a looming presence, as we saw over protests in Hong Kong. And this March, there was a mini financial crisis in US banks, which reminds us that volatility has not been banished from this sector. The problem with banks is that investors want the sector to make money, and in the era of soaring interest rates, they provide the perfect condition for that. But of course, regulators want them to be safe and boring and well capitalized. On the other hand, savers and borrowers want them to pay decent interest rates, but also provide cheap financing, as they have done for the last 10 years. Not all of these groups are going to be happy with how banks operate. For Morningstar, I'm James Gard.